Today, we're joined with Natashia Falconi, a real estate investor and the driving force behind Falcone Capital. Natasha specializes in value added multifamily investments with a focus on revitalizing underperforming assets and transforming them into high performing properties while creating better living environments for tenants. She's actively expanding her portfolio across the Southwest our South Florida market, bringing a strategic and community driven approach to real estate investing. Natasha, welcome.
Thank you so much, Joe. It's nice to be here with you.
Natasha, can you share a bit about where at in South Florida you're at, and then you talk about your role and how it fits into the bigger picture for Falcone Capital?
Yes, of course. We currently invest in the Miami market in South Florida and B and C class properties, apartment buildings. So we take underperforming properties, that's ugly properties, we make them nice, we stabilize them and provide great places for our residents to live, as well as provide good returns for our investors. And so what my capacity is in Falcone Capital. Basically, I'm the founder of the company, and my experience goes from all the way from property management, accounting, banking, and a whole gamut of things that provide a lot of value to the organization because I look at things from a lot of different angles.
With all those things going, what does a typical day look like for you as you're sourcing and managing opportunities?
That's like one of my favorite questions, and the answer is I really don't know. No, but what I mean by that is that every day is different, really. All kidding aside, every day is different. We can have one day where my main focus is acquisitions. So I am hyper focused on expanding our portfolio and meeting with sellers and meeting with potential investors and spending my time expanding. But in addition to that, I believe in making sure that as an owner, there has to be a hands-on component of understanding and knowing the asset management side of it. And what does that mean? Making sure that our properties are to the standards that we talk about. So you talk about it, but the action has to match. Making sure that we're meeting our goals and that we're meeting our objectives with the property, and making sure that we're delivering to our residents what we promised.
Well, with that being said, what are some of the major shifts that you're seeing in the multifamily market and in South Florida, the real estate market right now?
I don't know if I would call that shifts because we've been in this place for a little bit, but what I am seeing a great deal of is it's still a little difficult to purchase properties in this market because the prices of a few years ago, because of how rates have not matched where we are today with all the changes on the operational costs for properties. So I would say the biggest thing that I am seeing right now is basically the difficulty and how many deals you need to look at in order for one deal to pencil.
Yeah. So can you maybe expand on that a little bit? Like how does that impact your acquisition strategy or underwriting?
It hasn't changed my acquisition strategy because my acquisition strategy is still the same from a perspective of what asset class we look at, what we are trying to create in the marketplace, the type of property the demographics, the type of property, all of that remains the same. What has shifted is the underwriting. And what does that mean? Interest rates are a little higher, insurance and real estate taxes are higher. It all is affected by the price that you pay for a property. Operating costs are higher too. Rents have softened a bit. So when you put all of that together into the mix, it's not just one thing. Because I am a firm believer you can say interest rates are high, I'm not buying. I don't subscribe to that because interest rates go up and down, so it's not the only factor. You can buy a property at a certain interest rate, 2 years from now you can refinance and you don't have that interest rate anymore. But all of the other factors do need to also come into play. So you need to look at everything. And the way we do it is we look at everything as a whole. You can't just look at one specific item and decide whether an asset is good or not.
Okay, that makes sense. So then what's working well for you right now in terms of finding and improving deals? And then what's been frustrating?
Well, it's actually the same answer to both questions. What's frustrating? Finding deals. What's been good? Looking at 100 deals and finding one. So it's both. There are opportunities out there. They just take a little longer to materialize, but they're out there. You just have to work a little harder.
Okay. And which matrices are you focused on improving for your owners and the properties that you invest? Is it cash flow? Is it occupancy, ROI, tenant retention, or is it something else?
It's all of it because they're all in different buckets. So cash flow is a big driver. We look to push at the equity as well. And how do we do that? By improving the properties so we could bring rents to market. Many times we purchase properties that rents are not at market because the buildings need to be improved. They need a little love. So we think if we're able to bring rents to market, we do that. That affects the cash flow, which then improves the value of the property. We're always focused on tenant retention. It is better to keep a tenant than to have a turnover because of not only the loss in rents from not having the resident there, but also the turnover costs, which always exist. So we focus on that a great deal as well. We focus on, from on the operation side, focus on turnover of how quickly we respond to issues, because that also affects tenant retention. If you're addressing issues quickly, a resident is way more likely to want to stay than if you're not paying attention to them. So I would not say that there's this one metric that you need to look at to make your decisions. I think it's more holistic. There's many things that you should look and different levers you need to pull and different things that you need to look at to make sure that an asset is performing the way that you are intending for it to perform. And many buyers or managers of property manage them for different reasons. Some are looking for immediate cash flow and that's all they care about. So then you would operate the property one way. Others are, see the potential appreciation because of the market. Then there's a mix. I would say that as an owner, I fall into that middle ground where I believe the cash flow is important, but I also believe that the equity improvement is an important part, especially if you're a long-term holder of real estate like I am.
Okay, so what are some of the marketing strategies that you utilize that successfully help you to fill those vacant doors in your properties to draw more attention to those properties that maybe needed that TLC, and now you're letting everyone know you've got the TLC. Now we got to fill the spaces.
We posted it, in all the websites that exist. That's one, but that's, low hanging fruit. That's an easy one. We also speak to our residents. We let our residents know how what we have available. Many times our residents like to live near their family. So we're fortunate enough that we have several units potentially where there's sisters or families that live in the units. So they're together. I speak to community leaders a great deal and let them know. So if they have residents that are looking for properties, like lower income residents that are looking for properties, we also assist in that regard. So we tap into a lot of different areas in order to acquire tenants because sometimes, you'll have a waiting list for residents. You'll have a waiting list for a property, but then the market shifts and you don't. So you need to be very active in the community. You need to be very active in the not only on the internet and with the websites, but letting people know what you have available. A sign on your property is no longer enough.
Especially when they're hidden gems.
Yes.
There's a lot of properties that, at least in my area too, that you would never know they existed unless you had an intention to go there. So that,
And and you know what? Returning calls, because here's the other thing. You many times owners get a lot of leads, but they don't return calls. So, and I get that a lot of times from residents where they say, "Oh, thank you so much for returning my call. I've called 5 places and no one's called." Well, that gives you a competitive advantage right there. Return your calls. That's a big one.
yeah, and it's key to building multiple strategies. So in today's short attention span economy that captures
Mhm.
everybody in different ways, and you have to do more of it.
Yes.
So what are some of the marketing strategies that you would like to see or that you're looking to grow into more to help increase that brand awareness or increase those opportunities for filling those doors?
You know what I would love, which we're looking into and have not executed on it yet, but the faster connection to the resident. So, for example, to the potential resident. So, for example, many times someone that wants to has interest in one of our properties, when are you looking online or driving by? It could be late at night. So, if it's uh, 11, 12, or late at night that they're calling the office, I want to create, and this exists already. We just something that we need to move into, or they can receive pictures or they can receive information so that they can see real time, just like you mentioned, the attention span. So if you keep them engaged as opposed to a call not being answered, I think you have a higher potential of a potential showing or a potential move-in if you do that, as opposed to the limited time frame when you're answering the phone. So that's one of the things that we're looking into to improve.
Okay. Well, those are very interesting things to consider, and I think great information for all of our listeners to kind of hear from you in the multifamily market, what's working and what things can still be expanded upon. So we've been speaking with Natasha Falconi from Falcone Capital. Natasha, thank you for joining us today. We appreciate you sharing your insight, what you're seeing in the market, and how you're building your business.
It's my pleasure. And if any of your listeners ever want to learn more about the multifamily space in South Florida, please reach out to me. I'm on Instagram, Nat Falcone, and reach out to me. I have like a 5-step process document that I can send you so that you can think about what multifamily investing and if it's something that's for you. So I'd be happy to share that with your listeners.
Thanks again.